Hey everybody, Cowboy here. We have a clip regarding FOMO, fear of missing out. What is it? How do we avoid it? So please join us for a quick discussion on FOMO out of today's free live lab. Remember, we have this free live lab available to the public on YouTube, Rumble, and you can come in, ask us questions, talk to us. That's every day, Monday to Friday, from 8:30 EST to 9 AM EST. And we do that on every weekday except for federal holidays. You can visit us down at the website on the bottom, www.algofactory.tech, or you can zap that QR code with your phone and it'll take you right over there. Stick around after the video. It's a very quick video, and we will give you a little bit more information on how to find us and what we do. All right, we'll see you then. The thing about FOMO is that it gets people to make decisions that don't have anything to do with with market wisdom. Okay, so what do I mean by that? Well, look, we're technical traders in here, right? What we do is we take a look at the charts. We understand that events, news events, other fundamentals affect the charts. We understand that. But what I do, at least as a technical trader, is I wait for the effects of that event to play out before I decide to try to trade. Now that might take a few minutes, it might take a few hours, but this big fat candle upwards, this bullish candle that you see right here, this is a lot of money that was on the sidelines, and a lot of people thinking, okay, well, now we know that the CPI is lower, now they might not hike the rates as much. We want to buy the euro and sell the dollar, right? Because if they're going to hike the interest rate, the dollar is going to get stronger. People want to buy the dollar. Well, in this case, with the EUR/USD, buying that means you're selling the dollar, right? Because the USD is the second half of the EUR. So effectively, people are selling the dollar here or buying the other side of it, which is the euro, and you have this big candle up. Well, what happens is people see this big candle and they're like, oh my gosh, price just went up, whatever percent. And when you're trading forex, fractions of a penny, you're using leverage. So this is actually a pretty decent sized move to all happen within 30 minutes. That's a nice big candle. Look at all the candles before it. When's the last time you saw a candle of this size? Maybe back here on July 7th, and still not this big. This is a half-hour candle. I can just kind of really briefly roll back, and I don't think I can find a candle this size. Now, this candle hasn't completed yet. There's more time for that, but I bet you I'd have to go back to like another related event, maybe like the FOMC, where they actually talk about the rate. But this is clearly an emotional candle, if you will, or if I want to call it a technical candle, we'll say it's a news event. And those tend to not go forever. In fact, if you go back in time, you look at big candles. Here's a good example of a big candle right here, this big gray candle, which is a bearish candle. And price, after this all washed out, and this was a news event, and after it washed out, it headed right back up. The same thing is here. You had a news event, price headed up. Maybe it was, I don't know, non-farm payrolls or something, and then price went ahead and headed back down. Here's one right here. The candle didn't close high, but it did shriek up really high, and it got crushed right back down and resumed its regular direction. Here you have a series of those candles, and then price resumed back down. So, here's a really good example. You have price really pushed down and then resumed back up and eventually made its way back right to where it started. So these candles, as large and exciting as they are, they tend to get crushed back in the other direction immediately. And the mistake that people make is they see this big high momentum candle, especially if the candle closes and the candle, that purple part of the candle body, that closing up high, that's a high momentum candle. That means that price, if this closed and it looks like it does right now, right? That means that, and if you go into our classes over at algofactory.tech, that's www.algofactory.tech. I just put the URL on the screen there. We have a class that teaches you the anatomy of a candlestick and what this means. But long story short, you would know that this, if it closed in the next 11 minutes and it looks just like this, that's a high momentum candle, and there's a very, very good chance that price is going to head right back down to where it began. Okay, so a lot of people, though, they catch FOMO and they are afraid they're going to miss out on a big price move, right? And so they're going to buy this, So they're going to go long, right? They're going to enter maybe like right here. And the green is profit and the blue is loss. They're going to, enter right there. And then what'll happen is price may or may not go in their direction for a short time, most likely. Most likely, we don't know. But they're oh, this is a big move. Oh, I need to get in. They get really excited. And then price just goes against them and they stop out. Very, very common. It's FOMO. It happens all the time. And this is something that as a trader, FOMO is a big, big enemy. And there is there's its cousin too, or its brother, I should say. It's when you panic because of a move, right? So in Forex, up is down, down is up. All we care about, is volatility. So in the case that the candle moved in the opposite direction, it's still FOMO. People are they're FOMOing into shorts, right? So if this was like Bitcoin or something, I could roll over to Bitcoin and we can take a look at what that looks like from a, like from a spot perspective. So we're talking about buying Bitcoin and holding it rather than trading the Forex market. And I could show you Bitcoin is all kinds of FOMO. Bitcoin is made of FOMO. And if you go on a higher time frame, you'll see it. And you can see it on a low time frame all the time, but a high time frame is, historically where you really see the effect of FOMO. And a good example of FOMO is right here, where in, June of 2020, we had the big move up, and you see these candles get bigger and bigger and bigger. And then at the top of this move, you got all kinds of people that saw, oh man, these people, it went from 10,000 to 25,000. Oh man, I'm going to buy, and they've make some money. And then it's like, oh, it went from 20 to 40. Oh man, I'm going to buy. And then it's up to like 50. It went from 10,000 to 50,000. Like maybe it'll go to 150,000. And they buy way up here, right? And they buy like, let me see here. Like the very top. Because there's a lot of people right here at the top where they bought and price just went against them, right? That happens. And they're the ones who got caught in the FOMO. Now, people had down here gotten caught in FOMO and they got paid off. And that actually ends up causing more FOMO, makes it worse. And then you have the, and God bless them, you have the Michael Saylors of the world who, they're just going to, Bitcoin's everything and Bitcoin's the future. And he might be right, he might not be, but they buy emotionally. They're not paying attention to the technicals. And I can tell you right now, having been through a couple of these boom bust cycles of Bitcoin, right here, right about here, where that arrow is where I told my friends I'm getting out. Okay. That I think the price was, it headed back up. It even broke the prior high. A lot of people got super excited right here. You're like, oh man, it's going to go even higher. It's at 69,000. It's going to go to 99,000. Like, okay, maybe, but I'm certainly not going to buy up here. And as price calmed down and the technicals on the chart let me know, like, okay, all right, it's time to exit. But there's a lot of people who FOMO'd after this, believe it or not. They FOMO'd after this because they thought they saw price, well, not what they thought, they actually saw price go up, down, and then up a little bit higher, and then down again. So like, oh, well, then it's going to go up even higher, right? And they all bought, like right here, that's what this purple candle is right here. There are people who FOMO'd back here, right? And they even FOMO'd as these candles headed up, and in reality, they just became bag holders. They bought at 50,000, 40,000, and now they're kind of sitting there eating the dookie sandwich, for the last, 15 months, 18 months. So FOMO is something that we are conditioned as humans to react with greed and fear in markets. That's just how it is. And FOMO is greed. And so what we do at Algo Factory as technical traders is we distill the fear and the greed. Now, there's no way to get rid of fear and greed. That's not how this works. But if you go to the Algo Factory website, then what'll happen is, let me bust that out here. Let's go to www.algofactory.tech. And we have these courses. And I'll zoom in a bit here. So if you go to the top of our website, there's a spot where you can click on the courses, and it'll take you down to this area, and you'll see that we have 4 courses. We have the Essentials course, we have the Algorithmic Structure course. The Essentials is basically for like beginner traders. Algorithmic Structure is how we build algorithms. We have the Operations course, where you're going to treat your trading as a business. And then you have the Ethos course, which is actually trading psychology. Okay. And the FOMO and everything to do with FOMO falls under this rubric, trading psychology. It's all about the different biases. It's all about the mistakes that people make in trading. And so it's we put that together so people can actually go through this, do their own research, and make their decisions when they're trading based on technicals, based on history, based on science. Believe the science, and instead of using their emotions. So that's what we do. So head on over. The QR code is still on the screen. I'll go ahead and pop up the URL real quick. And we're going to have the gorilla give us the gorilla send-off.
All right, you savages. Listen, don't be wasting time watching on the sidelines. Join AlgoFactory.tech. Make that positive impact to your bottom line, to your financial future. Look, you learn from us. You could work from anywhere in the world, in any market, no matter if the market is going through a boom, a bust, if it's going up and skyrocketing and doing a moonshot, or if it's in the middle of a crash. You are going to profit. You're going to learn how to do that right here on AlgoFactory.tech. Join us today. QR code is on the screen. Link is in the description box. Don't think about it. Do it. Commit. Give me 6 months of your life and watch what we do to you. And with that being said, Cowboy, let's go into the live lab. Maybe that was a little too threatening. Give me 6 months of your life.
Yeah.
Watch what I do to you.
Watch what we do to you. Well, I
I'm
don't
gonna
know.
have to be like a military drill sergeant, Cowboy. That's what we got to do.
Oh no. So we are live every weekday, 8:30 a.m. EST, giving out free content. Come check us out on YouTube. Come talk to us. Go over to the website. That's www.algofactory.tech. Again, www.algofactory.tech. And for a limited time promotional offer, we are giving out memberships at $49.99 a month. There's a ton that we're offering over there. Come see what that's about. Also, you can see our Twitter link. All the links are up on YouTube. Come talk to us on social media. See us on the live YouTube videos. We hope to see you soon.